Let me now welcome on board the man from Motilal Oswal, Akhil Chaturvedi, the Chief Business Officer and Executive Director at Motilal Oswal AMC, joining in on the show right now. Great to have you on the show, Akhil. Thank you so much for joining in and congratulations. What a proud moment. You've managed to surpass that 1 lakh crore rupee mark when it comes to your AUMs. Tell me, given that one has seen a big move in the equity markets in the last decade, but we're still scratching the surface and the penetration levels are still aren't that deep. What is it that we could look at in terms of, visibility for your AUMs in the next, say, 4 to 5 years or even 10 years hence?
Thank you. Thank you so much. Yeah, it's indeed a big milestone we've crossed at a lakh crore. It's been quite a journey, I think, over the last 10 years. Literally, we were 2,000 crores. From there, crossing a lakh crores is almost 50 times growth. I think it's all credit to the way our economy is doing, and the same is reflecting in the capital markets. And over the last few years, obviously, we have seen a lot of retail participation, through mutual funds, through insurance, EPFO participation. So all of this, on the back of a lot of optimism, great returns from the market, a lot of optimism from the investors who continue to come into the markets through essentially mutual funds and other platforms. I think it's still, tip of the iceberg. The journey to growth looks very, very promising, and we are pretty excited for the next 5 years, 10 years. Uh, as we all know, we continue to see a lot of growth in the SIPs. Literally, the SIP volumes have gone up almost 40% in the last year or so. We are seeing a lot of lump sum flows also, ex of SIPs. So people are putting money across, different platforms. So I think it's exciting journey, and the penetration level, like you rightly mentioned, is still very, very low. So if you look at the total household assets, we're just about 5% penetrated in equities. Even on financial assets, we are about 7.5%. So how we see this is that if every year or two we see a 1% incremental movement of household assets into equities, that could be a movement of almost 8 to 10 lakh crores per annum. So that's going to be like huge volumes, huge liquidity coming through mutual funds. Therefore, the runway to growth is pretty long, and I feel that the compounding for our industry has been like more like 15% or so. I think we should expect a similar growth in the next couple of years.
Motilal Oswal AMC, where is the growth coming from? Is it coming from new SIPs? Is it coming from lump sum? How essentially is the pattern been for you?
Uh, yeah, Nikunj, so it's been, like I said, it's been a combination of SIPs versus lump sum flows. So while the mutual funds part of the business continues to grow through the SIPs, our SIP book has gone up 3 times in 2 years. We are about 100 crores. We have crossed 600 crores of SIP per month. And this is realized cash flows, not the registered SIP book, which might be a little different. The alternate side of the business, which is portfolio management services and AIF, is where we are seeing ultra HNIs and family offices allocating large pools. Although we are seeing that off late in that segment also, people are trying to stagger off their investments given the juncture we are at. But largely, it's been a combination of both SIPs and lump sum across all platforms, mutual funds and alternates.
What is the average size of SIPs? The industry average from AMFI is about 2,500 crore. Motilal Oswal being a more premier sort of AMC, what is the average size for you?
For us, it's about 3,800, and because a lot of SIPs also come through, the digital channels, direct, and a lot of retail investors. So our number of investors in SIPs also is up 3 times. So the average ticket is still pretty much, 3.5, 3,800 thereabouts.
Number which the industry also shares with us, if you could also tell with us, share with us that what's the whole ratio of new SIPs versus SIPs which are cancelled. Where is that ratio if you compare for Motilal Oswal AMC?
About 40%. So if we register 100, the net is about 70, 75.
Of late, you've launched couple of NFOs, then the defense one being the big one, and then there was a small cap one before that, then there's a mega cap before that. Would you be looking at launching new NFOs in this kind of a market, and would that be a focus strategy for the AMC?
So, Nikunj, over the last couple of months, we've been trying to complete our product basket. For a very long while, we were restricting ourselves to launch new products, and we remained in the diversified segment, which was largely flexi cap, mid cap, focus funds. Now, given the way our performances are shaping up, the confidence which is there in the investment team, and new ways of investing across broad-based themes, we feel it is a good time to complete our basket of products. Therefore, we launched our small cap fund, large cap fund, multi cap fund, variety of funds in the diversified segment. The first thematic fund on the active side we did was manufacturing, which looks very, very interesting in India for the next 5 years at least, with all the data points what we are reading. As we go ahead, both on the active side and the passive side, we have a couple of more ideas. So we would be launching on the passive side a very innovative fund, which would be the Momentum 50 fund on the Nifty 500. It's an absolute new product. So that's one thing which we're launching. We have a few themes in our mind. So as we go along, when we feel the levels are comfortable, we will do a couple of more thematic funds. We're looking at digital as an opportunity. We're looking at innovation as an opportunity. So I think in the next 6 months, you should expect a few more new ideations from our side.
I wanted to just deviate, Akhil, and understand your outlook overall on the markets and the current setup that we're at, given the fact that, yes, we have been to a certain extent taking cues from what we've seen across the globe. How are you looking at the overall valuations for the Indian markets? Where is it that you see us headed? Do you think that the undertone of the market will continue to remain fairly bullish with a streak of consolidation along the way?
I think, obviously we all are discussing the way the valuations are shaping up at the headline level, but we are growth investors. We are all the time trying to assess what are the opportunities, which themes are looking positive in terms of earnings growth. What are some of the turnaround stories? Where is the opportunity at the right price today? Broadly from market call, difficult to predict from a shorter term perspective, but the momentum looks still very, very positive. I think the overall GDP numbers are likely to be over 7%. That's a good positive. In event of rate cuts in US, hopefully we could see rate cuts in India as well. That's a positive for India again from macro perspective. Inflation pretty much in the comfort band of 4 and 6%. Again, that's a positive. And liquidity, like we all know, the liquidity has been very, very strong. So if the global macros look to be on the better side, India anyway is doing pretty much okay, and liquidity continues to come in. I feel that the market should be stable to positive.
What would be the differentiating part for an investor right now? I mean, every scheme claims that they are different, yet 80% folios are almost the same.
So at our end, I can tell you that we work very hard to create differentiation in clients' portfolios, and we keep tracking our portfolios overlap with some of our other friends' portfolios. So and the overlaps are pretty much comfortable between 5 and 15%. So how do we get the differentiation? How do we get new ideas early on? Is basically trying to get together and assess, identify new opportunities, new themes. So for instance, at this stage, we are very, very optimistic about on 7 or 8 themes. We were the early ones to identify telecom. We got inside and it worked out well for us. On the consumption side, we are very, very optimistic about the high-end luxury consumption, which has worked positive for us. The whole manufacturing theme itself looks very, very tailwinded. Of course, within manufacturing, there are some spots which are looking good from value perspective, and some are looking little expensive. So we need to be little stock specific. Capital market side businesses, NBFCs. I think there are enough and more opportunities where the earnings growth could sustain or probably improve. And that is where I think the fund manager skill of identifying these themes, sectors, subsectors, and then identifying new ideas and trying to be different compared to some of the other products. That's the endeavor for us.
And before we wrap, how does this entire global, global pattern of ETF fits in for a market like India? Historically, we've seen in matured markets, which is where we are headed, because we are the third largest market in terms of market cap. So we are not nascent. I mean, we're a large market now in terms of market cap. In matured markets, ETFs are outperforming and benchmark mutual funds, their benchmarks, and mutual funds are struggling to beat their benchmarks. How far are we away from that phase of the market?
I think there's still some time for the ETF side of the business to mature in India. I think the biggest challenge what we have on the ETF side is the liquidity and the volumes. I think there is absence of market makers, for the ETF products. We are doing some work on the ETF side. We have several products which are there on the ETFs, and several products where we have created both the sleeves on the index side or in index mutual fund as well as ETF side. What we see is that the appetite to invest in index-based mutual funds is far higher than the ETFs as of today. But I think as the markets will evolve, there would be interest, there would be more market making and more liquidity into the ETFs. And I think over a period of time, this eventually will evolve. We've seen that in the last 10 years. We launched our Nasdaq ETF, back in 2010. For the first 10 years, literally, we had no volumes, no business. The corpus used to be like 75, 80 crores. But in the last 4 years, we've seen both sides, the Nasdaq ETF as well as the Nasdaq Fund of Fund, both have grown phenomenally. But having first-hand experience of managing ETFs, I think if you leave alone the Nifty 50 basket, I think the other basket still the challenge of liquidity and market making is still something we have to deal with.
All right, Akhil, appreciate your time. Thank you so very much for joining in. That's the latest with Motilal Oswal AMC, AUM surpassing 1 lakh crores, well, getting a journey as to what the outlook is on the overall market. Steady as things stand.
If you like this video, then like, share and subscribe to ET Now.